Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about Ford stock. We're going to be talking about if it's a good buy, a bad buy, or if you guys just should stay away from it. We're going to be talking about everything that you guys should understand about Ford. We're going to be going ahead looking at the fundamentals. We're going to look at the earnings. We're going to look at the stock charts and overall how to make money from it. So let's jump into the episode. Hope you guys enjoy it. Roll the intro. Let's go. Bam! Now before we jump into the episode, right now we're doing an AirPods giveaway. So how you enter, it's super simple. All you got to do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you guys do that, you guys will be entered, and then you guys can get free AirPods. We're going to be doing the giveaway sometime next week. The biggest thing is I got to go out and buy them or order them, and with this virus going around, it's always a little scary to go out, and you guys know how it is. So we're going to hopefully try to get it next week. So let's jump into the episode. So over the past couple of years, Ford has honestly struggled, and one of the main reasons why I think they've had, a little bit harder time, kind of getting their products out there is because of Tesla. I think Tesla's taken the world by storm with their affordable and yet very luxurious electric cars. I think Ford should have came out with electric cars sooner and kind of made it a little more affordable to kind of get going in that field. But overall, Ford has a fantastic business plan and a well-structured debt plan. They do have roughly $23 billion in cash, so they're not, running out of cash anytime soon, which is a perk. Now, another cool thing that Ford does have is they do have a lot of new products coming out. They do have that new Ford Bronco coming out. They do have that new Ford Mustang coming out, the Mach 10 or Mach 5, something along that. But overall, they do have more products coming out there, which is a pretty key factor when it comes to a auto industry. If you guys look at like Tesla and a variety of other auto manufacturers, they're always releasing cars and they're always releasing products so we can get more attention to their overall brand. Overall, Ford is investing a lot of money into autonomous and electric vehicles right now, which is awesome. They do have that new Mach eSports SUV car, which is supposed to come out, and that's going to be a very, very cool and yet affordable car, so a lot of people can get it. They do plan on releasing a new electric F-150 and a new electric transit van, which should help definitely the company get more money and get more vehicles purchased. But some of the things that I honestly don't like about Ford is they just cut their dividend, which sucks. Ford has always been that company that has been very reliable with their dividends, paying 15 cents per share. And since this whole recession has started to kind of come about, the stock's been getting slammed down, recently trading at literally $9, and then within a couple of months it's been all the way down to $4. So we had this huge price movement. Overall, I think majority of that is because they kind of cut their dividends. So a lot of investors said, see ya, I'm selling my stock. But Ford did say that they're gonna put their dividend back on once this kind of whole virus and this whole recession kind of passes over. They'll get their dividend back out because they're gonna want to try to save capital and they're gonna want to try to save money just by not paying their investors, which is kind of makes sense, but it's just irritating as stockholders. Also, the past couple of earnings reports hasn't been the greatest for Ford. They have kind of missed their earnings projections, which kind of made the stock fall a little bit more as well. But overall, we're kind of on this little downward trend. So let's go ahead, turn to the charts here. So let's get a good look at support, resistance, and where I see the stock in the future. Let's go. Alrighty guys, so we are up and loaded here on the Thinkorswim trading platform here. And one thing, if you guys look at Ford, the past couple of months, we've been just getting slammed down like I was saying. Recently trading at around $9. Found some support here, roughly $6.60, bounced up a little bit to $7.22, $7.30, then just got slammed down. This is pretty much when they released their dividend just because this recession has been coming about. But if you guys look at the overall stock chart, so let's go ahead and do the max available so you guys can kind of see the overall pattern of Ford. So let's go ahead and zoom out as much as we can here. Whoops, let's do a little bit more because I kind of accidentally clicked daily. Let's go ahead and do month right here, max available. Okay. So as we go ahead and look at Ford here, you guys can clearly see that back in the 2008 era, we had this huge sell-off from Ford, hitting as low as $1.01. So obviously this is getting in like penny stock territory, really under $5 is classified as a penny stock, defined by the SEC. So Ford right now is trading roughly six and a half times cheaper than it's previously traded. Really, it has this beautiful and strong support here at 650. Once it broke that, I knew we were going to get this hard sell-off. So the next really buying pressure it should most likely get if things turn bad for Ford is really right around this $1 mark. I know you might be saying, well, I shouldn't, wait to do that. No, you guys should do this thing called dollar cost averaging. So what this means is as Ford stock continues to fall, you continue to purchase at dollars. So the next purchase dollar you guys are going to want to get in is at $4. So as you guys can see, I've been doing this and I'm moving my average price down. So by the time Ford turns around and the overall economy starts coming up, my average position is probably going to be somewhere around $3. So when Ford stock pushes all the way back up to $9, just like it did the following years after 08, I'm going to be in profit. And as you guys can clearly see, Ford used to offer this dividend right here. It cut it and then continued to add it right in here. These little dollar marks represent paying dividends. So as you guys can see, they stopped it and then continued to do it, and then they stopped it just recently, which in my opinion caused this huge sell-off in Ford stock. But overall, if you guys go ahead and look at Ford, Ford's a strong company. It has a great business plan. It has a lot of cash available. Do I think Ford's going to get hurt by the economy crashing? Yes, I think all car manufacturers, I think all car industries are going to get hit hard by this, just because people are not going to want to go out and actually spend money on getting a new car. They're most likely going to wait until they have a job. And I think that's very common when we have a overall recession. But I still think Ford is a fantastic buy if you guys continue to do this strategy called dollar cost averaging. Next buy would be at $4. After $4, it would be $3, $2, then $1. And then once the stock turns around, you're moving your average position down. So hopefully we can get it around $3. That would be, obviously ideal. Then the market turns around, pushes all the way back up. Your money's going to start compounding. They're going to start releasing dividends. And you're overall going to be making a lot of cash just from letting your money and doing that simple strategy, dollar cost averaging. So overall, I don't think Ford's going anywhere. But you guys can clearly see that, we had this huge downward trend starting up at, $20. Starting up at $20, all the way going down, boom. And then down here, right through here. So as you guys can clearly see that, it's kind of common for Ford to trade in between here, but just getting the sell-off doesn't look good with Ford. So, obviously we want to wait for this market to come back, and I think Ford's not going anywhere, in my opinion. Ford, and if we go ahead and look at Tesla is selling off as well. Tesla. I always forget their tickers, but you guys can clearly see we had this huge bull market, and then Tesla just got slammed back down. Found some support here at roughly $400, just because that's old resistance. But overall, same thing. Tesla is going to have a hard time during this recession. Do I think Tesla is a great buy? Yes. I think if you average your position down, you guys can see I don't have any Tesla on this account. But overall, if you guys average into your position, maybe you guys can get in at $300. $300 for Tesla is great. Even if you guys got in at 180, it's fantastic. Overall, just keep averaging your position, and it's better to be in than out, in my opinion. So that's kind of my overall thoughts on Ford and the overall, in the overall auto industry. I think we're going to see a little recession, very common, but overall it's going to rebound. It's going to come back stronger, and they're going to get those dividends paying again. Alrighty guys, thanks for watching. I hope you guys enjoyed the episode. Make sure you guys go ahead and smash that like button. Do what you guys do, because we're doing that AirPods giveaway. Alright guys, peace out, and I hope you guys have a great day. Hope you guys learned something. Take care, guys. Peace. Bam! Mini lesson number 2. In today's episode, we're going to be talking about a fundamental catalyst for day trading stocks. So mini lesson number 2, what is a catalyst? So this is a event or other news that propels the price of the stock up or down dramatically. Some examples: news, earnings, product announcement, FDA approval. Let's look at a chart. So this is Tesla. Tesla announced today, right on their news, that they're going to be working on ventilators. So what this did is this propelled the stock all the way up from, 430, hitting highs at 477. Could have got in right on that news and made some money. As day traders, it's really our job to find stocks with volume. So people look for a fundamental catalyst to kind of get into a position to make sure there's people, to make sure there's a good announcement, and to overall make some money. Like for part 3.